All right. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. What a crazy day it has been. I promised you guys this morning, because my stream was abruptly ended, that I was going to think about doing one tonight, 12 hours later. And here we are. Not exactly 12 hours later, but close enough. Let's go straight to the charts and see what the hell is going on. All right, here we are. We are looking at the monthly chart. The monthly chart has started off on a really good month. So what is the best case scenario here? Now, I know some people were able to draw a new triangle. I don't know if I can draw a new triangle. That's going to be tricky. We're going to look at it with fresh eyes. And with fresh eyes, we can do this and... well, not much, right? We can do this. I'm not going to say I like it. I'm not crazy about it. Maybe a weekly scale will give us something better. Technically, that's a touch. And that is a legit touch because we're not breaking the bodies. But we just extended this by a lot. So with fresh eyes, I'm going to leave this triangle there and keep praying that this triangle is going to resolve sooner than later. But even if it's later, that's going to be a beautiful 2023. Imagine if we spend all of 2022 below $62,000. That's going to be such a massive breakout. So I'm going to take this. We're going to go all the way down. That's a 40,000 point swing. So that is 40,000 points to the upside. Doesn't look like much, but it's nice. Takes us right to 100K. Still going to be disappointing, 100K in December of 2022 instead of 2021. But hey, as long as Bitcoin stays above this area, it is all good. Weekly chart. Welcome, everyone. We got our few hundred viewers on already, so that's awesome. Lots of people still think we're going down. I will take the opposite side of that. Now, look, the weekly chart is not yet bullish. The MRI, still bearish. The channel, still bearish. Moving averages, still bearish. Below the short term, below the intermediate term, still both of them falling. The Lucid SARS, bearish. Everything is bearish. Everything is bearish. The RSI, bearish. Very bearish. MACD, very bearish. CMF, a little bit bullish, but nothing to write home about. So the weekly chart is still a big problem. But we weren't trading the weekly chart. We were trading the daily chart and the 4-day chart. So, wow, where the hell is that moving average? I have to take off the price to see where the moving average is. So let's go back to Tyler Jenks's work. If you never looked at the price at all, how would you trade this chart? How would you trade it? When would you buy? When would you sell? Okay. So you would want to buy at the moving average crossovers. If the moving averages didn't cross, you don't want to be in the market. Look what happened right here. They never crossed, and we went significantly lower. Okay. When they cross to the downside, you want to get out of your positions. The moving averages on a 4-day chart have not yet crossed. But we only have 23 hours to go in this 4-day candle look. And when the next candle begins, these things are very likely to cross over. Okay, very likely to cross tomorrow. That puts us in a bullish position. Now, we preemptively jumped on a trade because of the daily MRI buy. And there was also a weekly MRI buy here, but I take this a lot less seriously. This line was here, not for anything the current candle is doing. This line was there to tell us when to exit I think that's what it was for, when to exit the other trade. The bullish trade that we tried taking a long 20% position and that failed right around that line. I think that's what it's for. I don't remember why else I had it, other than it is a good area to break. Now, when this candle closes, we will be above 2 moving averages at that point, which is great, but I want that moving average crossover. Also, the price of Bitcoin has gone up a lot in the last, month, basically. Less than a month. Since January 21st, in about 2 weeks. In about 2 weeks, we have gone up 25% with almost no drawdown. Not a serious one anyway. And in the last day, we've gone up way too much. So I am not FOMOing in. I'm not FOMOing in. I'm already in. I'm only in for 20%. That's okay. There are still lots of reasons as to why we should be careful. The last time we were in this position, we reversed and we reversed hard. We need a full candle to be above the intermediate term moving average. That would also cause the moving average crossover between the 3 period and the 9 period. Okay, the 9 period ain't going to be rising anytime soon. So we can allocate to 40%, but I need some consolidation here. I don't think we're going to go straight up, but let's take a look at the smaller time frames. All right, guys, come out to Unconfiscatable, the amazing conference taking place in Las Vegas, Nevada. There are still some mask mandates in that state and at the casinos, but we're hoping that ends as our conference begins. The conference is exactly 1 month away. I'm going to interview some more sponsors soon because they have awesome companies. Join us. Carnivory dinner is sold out, but not the axe throwing. You just show up, and we're doing that the day after the conference. We're going to do some axe throwing. We're going to do some bowling. Come compete. You know, I might put up a bounty on who can beat me in these things, and you can earn maybe some sats. We'll see. Okay, that's Unconfiscatable. Follow the YouTube channel. Follow me on Instagram, and also Unconfiscatable on Instagram. And the Financial Summit, if you like, it's all there. On a mission to get to 10,000 followers. And Unconfiscatable is on a mission to get to 1,000. We'll get there. We'll get there eventually. Okay. Oh, I'm off to Austin. I'm off to Austin, Texas. There I am on the speaker list. It's going to be great. Hey, Lamar is going to be there. Cool. Haven't seen him in a while. Come down to Austin if you're in the area. Round Rock is right next to Austin. Daily chart. Guys, I can't remember the last time we had a 10% update. 10% update is crazy. This was a 10% update. Bitcoin went up 11% in 1 day. 11%. And we're still rising, by the way. We went up 11%. I tweeted out earlier, this was the last time we went up close to 10%. So we have to go way further back to find the candle that was up over 10%. There it is. This candle right here was the last time Bitcoin was up. This candle was up almost 12%. Okay. And considering the day before, we went up a lot. Now, what did this lead to? Well, this candle was going to go into a death cross, and it didn't even make it there. So it didn't amount to all that much. We did make a lower low. So that doesn't mean all that much. But the previous time, we've gone up over 8%. We did go all the way and make a new high, but we were above all the moving averages. Very different situation. Remember, there is resistance right here at 43,000. This is the daily chart. There is resistance at 43,000. We have to be conscious of that. Okay, we have to be conscious of that. I think Bitcoin is going to take a little bit of a break. Now, we did just start a brand new MRI count. Now, let's see how far that leads us. But I was not expecting a day this big. But I was also on Spaces. And I've been telling you guys for a while that I still think this is a bull market. And because this is a bull market, I was not going to be short in this market. I was going into all cash at some points. And good thing we timed it perfectly off the daily MRI buy. And the daily MRI sell also was textbook. 1 to 4 candle correction as expected, and then more upside. Just that the upside came very, very quickly. Very quickly. Here's the 1 hour chart. The 1 hour chart hit consolidation, MRI sell, completely ignored it and just kept going higher. Or about the 4 hour chart? The 4 hour chart, I believe, is coming up on its MRI sell. Waiting for the MRI. There it is. There's the warning candle. So current candle or next candle, we are likely to hit a top and take a little bit of a breather, which would be a good thing. I never said silver was going up. That's crazy. Someone said they sold their Bitcoin when I said silver was going up. Silver's not going up. It could be going up. I don't care for silver. GBTC, the chart is back. If FOMO was back, if the price of Bitcoin starts going to a new all-time high, I would expect the premium to evaporate and evaporate quickly. This might be GBTC's time to rise again. We've seen the premium below zero for a year. That is 1 year. I do believe we are going to go back into the positive side. Someone is asking you to take a look at the 12-hour chart. Or we can take our daily chart and we can change that to 12 hours. The 12-hour chart had also had a nice MRI buy at the low. And it's bullish. It's very similar to the daily chart. I don't see that much of a difference. Oil continues to rise. We're at $92 a barrel, and I will continue to expect high oil prices. Very high. Financial Summit taking place in the Dominican Republic, the first week of August. An amazing event for traders and money managers. Gold, not interesting. S&P. I expected S&P to reverse today a little bit. It did, but not that much. We can look at the lower level time frames like the 10-minute candle. I'm curious if there was a 10 a.m. reversal. Here is the 9 a.m. candle. Here is the 10 a.m. candle. There was a 10 a.m. reversal. The peak in the price took place on the candle after 10 a.m. So a little bit later, a few minutes later. That would have been hard for me to time. I need the 10 a.m. candle or right before the 10 a.m. candle. The candle after 10 a.m., the 10-10 candle already makes it tricky to enter any positions. Curious how much we fell. That was 46 points. Wow. That's a lot. That's a lot. What am I missing here? Something is off. If that's 10 a.m., market closed 1600. So why was this a bearish day? Oh, because market closed back here. So we've got, wait, what am I missing? Yeah, I guess so. I mean, we went significantly higher, but still did not close at the high. We were at the high. So we were at the peak of the market. We were at 45.40. 45.40 at the peak of the market. Right. So it would have been a break even. So we closed at 45.40 yesterday. Okay, so it was down in overnight trading. So yesterday at 1600. Oh, right there. Okay. Yeah, so we rallied yesterday at end of day. And then that's where we were at the peak. And then we sold off into market close. I think tomorrow is going to be a bullish day. We will find out. Do you expect Facebook huge gap to be filled, or do you not believe in that theory? I don't necessarily believe in that theory. Gaps tend to fill, but I wouldn't bet on it. Let's go take a look at Facebook. What is this? I still don't know what this is. ETF Series Solutions Grayscale Futures of Finance ETF. I have no idea what that is. None. That gap ain't closing anytime soon, guys. That's a bad gap. Facebook is not making any money. They rebranded to Meta, which is, I don't know how they're going to make money there, but I'm sure they'll find a way by selling your real estate to someone else that you buy there. Bond yields. Yeah, I wouldn't bet on this gap closing anytime soon. Bond yields. 10-year yield. Uh, 10-year interest rate is kind of high. I'm a little surprised that it's that high. You see, the Fed, once again, is useless. What's the Fed funds rate? Let me see. Fed funds rate. Fed funds rate is 0.25. So 25 basis points. I want to see a chart. Okay, great. Here we are. So let's look. I continue to say that the Fed doesn't do anything. Like they do nothing. They have absolutely no effect on almost anything. So I'm in a minority here because everyone thinks the Fed is, this powerful and evil or whatever. It's not. It's not. It's the president's dry cleaner who can be replaced tomorrow. Like it's. So the Fed funds rate dropped. Let's zoom in. Let's zoom into the last 5 years. Okay. So here's the Fed funds rate all the way at 2.5%. I'm going to round. In 2019, in the summer of 2019, the Federal Reserve is keeping the rate at 2.5%. Let's go to the 10-year yield. 10-year yield at that time, summer of 2019, here it is. There's the summer. August, July, June. There it is. Where is it? It's at 2%. You see how the 10-year yield was almost the same as the Fed funds rate? The Fed funds is at 2.5. The yield is at 2, right? Where is the 10-year yield now? Well, it's almost at 2, right? It's around 2 again. Where is the Fed funds rate? It's at 0. Why in the world do people believe that the Fed funds rate have any freaking effect on anything? It is like, it baffles me to no end, right? Like, explain to me how the 10-year treasury is almost the same exact percentage as it was up here, where holy shit, the Fed has keeping a high rate, versus here where it's free money. Okay, it doesn't matter. Like this Fed funds rate is completely irrelevant. You know, if they raise it to 5%, yes, it will be a problem. But if they raise it from a quarter to whatever, like, come on, guys, come on. It's like they can raise, it doesn't matter. It's totally irrelevant. This is what drives the market. Like, this doesn't drive the market. This follows the market. Let's go back. Are we 5 years? We are 5. Let's go back 10 years, right? Look, the rate is staying at 0 all the way until the beginning of 2016. In the beginning of 2016, the Federal Reserve finally starts raising the interest rate 5 years too late. Okay, so they are 5 years behind. Well, maybe not 5, but 3 years behind on raising the interest rate. They start raising it in 2016. Okay, let's go to the 10-year yield. Let's zoom out. Okay, 2016. Where is the interest rate? Okay, I can't go after the week. 2016 weekly chart. The beginning of 2016, right? So the interest rate in the market had been rising from 2012 at 1.5% all the way to 3%, while the Fed funds rate was at 0, like a quarter, the whole time. We went from 1.5 to 3. Then we declined back to 2. And right here in the beginning of 2016, after the rate in the real market has been hovering around this time, the Fed had to start raising the rate. So the Fed starts raising the rate around here in 2016. And the real rate also went up. This is what's driving it. This goes first. Let's see where the peak is. The peak is in October 2018. The 10-year yield the rate starts to fall drastically. By September 2019, the yield had fallen 50%, from 3.25 down to 1.5. Okay, this is 2019. COVID hasn't hit yet. Then it went up a little bit on a dead cat bounce, and then it starts to fall again. But now 2020 comes in. February 2020, we're back at 1.5. But notice how the rate is falling from 3.25 to 1.5 from at the end of 2018 to the summer of 2019. The end of 2018, right here, the end of 2018 through the summer of 2019. So August, July, in August, they dropped the rate. So in August 2019, they dropped the rate, and it's rising from 2016. So in August, they dropped the rate. Why did they drop the rate in August? Why did they do that? The Fed did what the free market did. The free market, before COVID, the free market drove the interest rate from 3.25% down to 1.5%. The Fed has to follow the free market. That's what the Fed does. The Fed is a follower. They're a follower after they can't even see the leader anymore. That's how late and behind the Fed always is. It is always this way. So after the real market has dropped the real interest rate by 50%, over 50%, the Fed finally says, you know what, maybe we should drop the rate. So they start dropping the Fed in July, the rate in July. Okay, they start dropping the rate in July, they drop it again in August, and they drop it all the way until COVID hits. Okay, but right here in June, at the end of June, the Fed is still at the top, thinking they're going to keep raising rates some more because they forgot that the real market is already crashing the interest rate. That tops in October. The Fed funds rate, like they finally stopped raising it, right? Like when did the Fed stop raising the rate? The last raise was in December 2018, end of December, right? So let's say January 1st. January 1st was like the very end of December. So in 2019 January 2019 was the last time they raised the rate. What was happening in January 2019? Right here. January. Right. So the rate's already down like 40%. Right? The rate's down January 2019. The rate's down 20%, right? So this is where they say, hey, you know what? Maybe we shouldn't raise the rate and see what happens. Well, what happens? How long do they wait? They wait until July. Till July, they do nothing. In the middle of July, they lower the rate. So what happened between January and July? Well, between January and July, here we go. There's January 2019. Where's July 2019? June, July, there it is. The rate drops another 23%. So the rate went from 3.25% down to 2%. And the Fed says, hey, you know what? The economy is in a little bit of trouble. Let's lower the interest rate. Like they don't lead. They've never led. All right, that's enough on the interest rate. So what is the Fed going to do? Well, if you look at the 10-year yield, it's been rising. The Fed is probably going to raise the rate because the rate is already rising, and all it needs is the stock market to rise. If the stock market starts rising, they will absolutely raise the rate next meeting. All right, let's go back to Bitcoin. Yeah, we knew it was going to take a little bit of a breather. Can't go up forever. All right, guys, this was going to be a quick stream. We can look at TLT. If the yield's rising, if the rate's rising, TLT is going to be falling. So you can see that falling here for obvious reasons. People were saying Tesla was rising. It's not rising that much. NVIDIA was taking a big bath in tears. But look at that. It went up with the MRI on a weekly, bounced right off the moving average. How did the daily chart look? Oh, beautiful MRI buy. Would have been tricky to navigate, but looks okay for now. Tilray. How's our good pal Tilray doing? Tilray is doing pretty good. I like this position for Tilray. Today's Friday, right? So, yeah, it's unfortunate this daily candle broke the MRI count. But the weekly should look good. And I'm still bullish here on Tilray. Let's see how Twitter earnings goes. I would love to see this stock go into the toilet. I don't have much of an opinion on the real estate market at the moment. Stock market is still free market, guys. Relatively speaking, compared to the Fed funds rate, stock market and bond market are very free market. How did Amazon's earnings go? Very well. Look at that. Amazon's earnings. Ooh, interesting. So it crashed on earnings. Oh man, if I had traded this with options, but you know what? It wasn't that much of a percent drop. Yeah, see, that's only 8%. So that would have been tricky for my option plays. I always needed about 15%, not 8. And then had this fallen 15, and I would have sold the puts at a profit, holding on to the calls in case a miracle happens. The miracle happened the next day, and now I'm profiting from both calls and puts on straddle plays. Happened to me once. It's like a huge payday. It was like a stock crashed because of earnings, so I made a bunch of money on the puts, and then I just was gonna, and the calls were worthless. So I just held on to them because it wasn't even worth selling the calls for like 5 cents, paying a fee to sell them almost as much as the calls were worth. They were so far out of the money, they were irrelevant. And I had them for like a few more months of time. And then like a month later, the company got bought out and the stock went up 2x. And I woke up in the morning and I'm like, whoa, what the hell just happened? My calls were way in the money because of a buyout. So got lucky. This would have been beautiful. Whoa, what's going on with all these streaming services? Like, it's not like people are going to work. By the way, if you ever had to call a government agency, I don't think anyone works anymore. Like, I got friends, myself, I need to call some embassies. I mean, like, trying to call like government employees, like calling the DMV, calling the Social Security office, like calling these government offices, it's literally like idiocracy. You can't even get through. Their mailboxes are full. It like people comment, like, have you tried to deal with a government office in the last 6 months? It's like literally the most competent people like either quit or got fired. And the only ones that are left are total idiots that aren't even working. Like, it was always bad dealing with a government agency, any government agency, even like your like farmers market organizer, right? It was always bad dealing with like any government agency, though that's not really a government agency, but you know what I mean. But it's just gotten exponentially worse. It's like the pandemic is an excuse for a government worker not to work. It's like they're literally taking the tiredness you get after catching COVID for 10 days to like 3 years. No, I agree. Like government employees have always been bad, but never this bad. All right, guys, I'm gonna call it a day. Oh, did the moderator send me something? Tone, can you look at the OG Consensio chart on the weekly? Sure, but it's not gonna be any different, really. I mean, here's the weekly. In order to look at the Consensio based on what Tyler Jenks was doing, I would have to look. I can't pull up the 2-day, unfortunately, the 2-day chart. So it would have to be, the 3, the 7. Wait, what number was there? I had the 7. Okay. So it would have to be the 3, the 7, and the 30. So that would be the, I can't do 3. Why can't I do 3? I have to do 4. Yeah. So look, we're still below the intermediate. The short term would be rising, but it wouldn't have crossed the intermediate yet, even if it was a 2-day, like Tyler used to use. He just wanted that crossover between those two. He was mostly going off the long term, which is the 30. So it's still telling you not to go long. That's all I can tell you. Please take a look at the long-term descending trend line on the daily chart. It looks like it got broken, didn't it? It's broken. We've broken the long-term trend line. I mean, I can adjust it a little, not to like that, and this is almost a touch. If I fudge it a little bit, make it a tad steeper, There you go. That's the trend line. We're sticking to our rules, right? We got a touch here. We got a touch there. We got a touch here. And we're not breaking any of the bodies of the candles. And we just broke that trend line. So it looks great. Thanks for the heads up. Took a look at the yields. Tone, the interest rates have been raised here in England. Yep. Okay, great. Nothing changed. Check out Google. Absolutely killed on the numbers and 20-to-1 stock split. So there's earnings. Clearly it went up on earnings and now people are coming to their senses. So I don't know what to think of this. I would stay away from it. That's a reversal candle. It's probably not going to close the gap. It'll probably turn around and go higher. But I wouldn't bet on it. Bitcoin dominance, I really don't care. All right, guys. That's it for me. Trend lines are subjective. Not really. Not if you have rules for making those trend lines. I have rules for making trend lines. They're not subjective. A wedge can be subjective because now you have two trend lines and now you have way too much leeway, right? So the Tone Vays School of Education, which you can find on tonevays.com, learn trading. I mean, my personal tricks aren't taught there. You have to kind of get the videos for that, but you can read about trend lines here. And if you want to go further, it's the on-demand videos. So I teach trend lines in here. You want to buy the package though. It's way cheaper, only $500. You get risk analysis, risk education, and trading education. So if I go back to a chart, random chart, it's not subjective. I grab a line that touches the maximum number of candles without breaking any of their bodies. Not subjective, you know. Now, as long as the middle of that trend line goes through the opening price, I'm not breaking the body. It doesn't matter that the corner of that candle is above the line. That doesn't matter. As long as the line goes through the opening price. This is not subjective. And I drew this line to touch the max number of candles without breaking their bodies. So that's a touch, that's a touch, that's a touch, and that's a break. Of course, you can't profit from this break because you don't know if it's going to break or get rejected. But there's not much subjectivity here. I also draw thick lines, something like that. You know, I hate drawing thin lines. You want to make it clear what's going on. So there you go. Not subjective. All right, we can try it again down here. Maximum number of candles without breaking any of their bodies. Nice to get a back test. Down we go. Double back test. Look at that. Again, not subjective. I did not break a single body of a candle. I went through a body of a candle right there, but that's because it's a doji candle. So it's right on the trend line. This was a random chart. It just happened to be in front of me. All right, guys, come join us in Las Vegas for Unconfiscatable. This is pictures from our carnivory dinner, our pinball tournament last year. We got axe throwing and bowling after the tournament this year. For those that want to stick around Vegas and have fun, and join us in poker. To register for poker, click on this banner right there, Celebrity Poker Tournament, or this banner here, which is the same banner right after the registration window. All right, guys. Thank you so much for watching. And I'll see you all probably tomorrow. And I tend to take Sundays off. Bye, guys.